Hello everyone, how are you all? Brutal BTC here, and I'm basically trading these markets like from past 6 to 7 years. Yeah, constantly working on the charts, on the fundamentals, on the technical analysis. So in this video you guys are going to learn how to predict the market with the help of technical analysis, and this video is going to be very brief and on to the point. uh, I have a question for you guys. Have you ever wondered how the traders basically predict the price movements in the crypto market, stock market, indexes, dollars without even looking at the global economy? So yeah, this is highly possible and highly working, to be honest. So first of all, I'm just gonna let you know that there are two things on which the whole crypto is changing their price movements, having several ups and downs. So both of those are fundamental analysis and technical analysis. So what is technical analysis? Technical analysis is basically a very simple thing that has been complex in the past few months, past few years, just because of some new concepts. And learning technical analysis is a valuable skill for individuals interested in trading and investing in financial markets. So we're gonna talk about step-by-step guide how to get started with the technical analysis. We are not going into the details of fundamental analysis, but I'm just gonna let you guys know a little bit about fundamental analysis. That fundamental analysis are basically your news, the power or the strength of a coin, of an asset that might grow in the coming weeks, in the coming days, or in the coming years. Fundamental analysis is basically used when you want to invest in any project and want to wait on like a year for the 6 months, especially for the midterm to long term. However, technical analysis even gives you price data of the next week, the prediction of next day, even the prediction of next hour. So yeah, we're gonna talk in detail about the trading on the basis of technical analysis. So first of all, you guys have to go on to a tab on your desktop or anywhere where you guys can basically access the charts. So you have to write trading view, and you guys will get something like this, the first tab. Open up that tab and you guys are ready to go. Now you will have something like this, some interface like this, where you guys can actually track the markets. Like this is a market of S&P stock. What you guys have to do is just go on to the products, open up super charts, and the trading view charts will be visible right in front of you. Now you guys can select any chart. For example, you want to trade the Nifty Bank of India. You just have to write Nifty over here and it will be visible over here. Right, now this is a chart, so we are going into the details of technical analysis. I'm gonna give you brief 20 points that will definitely help you to predict the price movement. And at the end of this video, you guys have to actually predict the price movement of the coming days by just having some work on the chart for like 30 or 20 or maybe 15 minutes. So first of all, what you guys have to do is simply just let me give you some of the information about technical analysis before going on. So whenever applying technical analysis to cryptocurrencies, you can focus on the same principles as with other financial assets like gold, like euro, any commodities, or any other financial markets as well. So first of all, you guys have to look at the price charts. This is basically your price chart, and this is basically used to track the historical price movements of cryptocurrencies. Common types of charts include, like, there are separate line bar, and you guys can see that line with the market, step line, but the best one is using the candles one. Now the second one is your trend. Your trend is basically telling you that if the price is slowly going back to the upper side or to the downside, identify trends in cryptocurrency prices that will help you 100%. These can be upward like bullish, downward like bearish, sideways like range bounded. Understanding the current trend can help in making trading decisions. Right, now the third one is your support and resistance. Like this is your, here's a line, right? why I have made this line over here, or like over here, why I have made this line over here. This is basically an area where the price have taken hits. Like when the price came over here, it went down. Second time price came over here, it again went down. Why? Because this is resistance. Resistance basically means an area which is resisting the price to go back to the downside. That is known as resistance, like this. And when the price broken out from this resistance, usually what happens when the first touch comes, that becomes an area where the price is resisted. Now second time the price will go at the same zone. Highly possible that the price can go back to downside, because this is a resistance area where the people are active and they are selling because they think that this is a resistance and the price will go down. So more people selling means the price will definitely go down. And on the third time, it always happens in the market, the first touch is stronger one, like a strong possibility of price coming down. Second touch is kind of stronger one, price will come down. And at the third touch, this resistance is getting weaker with every single touch. So this is how this support and resistances work. Now the price went up above this support or resistance level. The same line which was acting as resistance before, now this have turned, when the price went up, this turned into support. Now this is supportive level. The price will come here, it will take support, people will buy over here, price will move up. That's pretty simple. This is now your support. When the price came back down, touched this level, went up. Now once more the price will come down, will touch this level and will go up. So this is your basic level of trading. Now what we guys usually do, we draw some horizontals over here like boxes which act as support and resistance levels. Like price have touched over here, now it's again trying to go back. Probably it will go to $27,000, $28,000 before coming further down. And on the third touch, it might break down towards the lows. So this is just for the explanation. So these are your supports and resistances. Look for the key support levels where price tend to stop falling, and resistance levels where price tend to stop rising. These levels can serve as entry and exit points for traders. Now the next thing is time frames. These are your time frames: 1 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30, 1 hour, 2 hour, 4 hour, daily, weekly, monthly. Right, now these are your time frames. Cryptocurrency markets operates 24/7, so consider using different time frames, example daily, hourly, even shorter intervals like 5 minute, 15 minute to analyze the price data. Shorter time frames can provide more precise entry and exit signals. You guys have to just, I have a very precious advice for you guys, that just look at market on 1 hour, 4 hour, daily, weekly and monthly. All of these below levels like 1 minute, 3 minute, 5 minute, 15 minute, 10 minute, 30 minute, only use these for your entries after analyzing on higher time frame. So the next thing is volume analysis. Analyze trading volume alongside price movements, and increase in trading volume can indicate strong buying or selling pressure. How you guys can basically check out the volume? Now go to indicators, write volume over here, and here's your volume. This is your volume. We just have to go into the styles, go settings over here, style over here, and if you want to increase the opacity, you guys can do over here. So look at where was the highest volume. Here was the highest volume, so the price started going back up from here. Same way, here was our highest volume and this was the bottom. Price started went back up. So look for the high volumes, look for where the people are basically buying in huge amounts, and that area might work as a very good level from where the Bitcoin can start moving back up. So this is your volume trading. Another one, I will give you a tip, like go to indicators, search for on balance volume, and look at this. On balance volume is not as higher like we had seen in the past over here. Whenever this will jump like this and the price remains same, that means there's a lot of volume coming into the market, so market can start moving back up. Like when the price was coming down over here, suddenly OBV, we call this OBV, on balance volume. Suddenly OBV jumped and the price was just consolidating, just on the sideway move. And at that time, actually what happened, the price started moving back up, just because someone bought huge bitcoins and a lot of volume was coming in the markets at those levels. So this is how you guys can basically track through the help of volume. Now we're gonna move on to our 6th level. This is technical indicators. You have to utilize various technical indicators like moving averages, relative strength index, MACD. I don't think so MACD is good for you guys, so just ignore, never think about MACD. MACD, never think about that. That will basically smuggle up your whole trading. There are some other indicators which I usually use, like look at RSI. How you guys can basically use RSI as an indicator. Just remove every single thing from your indicator. Go to style, remove everything, change the color to whatever you think is better for your eyes. Now what you guys have to see on RSI is, you guys just have to see divergences. I will show you an example. For example, price is doing something like this. For example, price is doing something like this, and the indicator is doing something like this. So this means that the price is coming down, but the indicator is saying that the relative strength index, RSI basically means relative strength index, is going to the upper side, so there's more strength in the market and price is going to bounce soon over here and going back onto the highs. Always use this on daily time frame, weekly time frame. RSI is a very good indicator, but only for the higher time frames. For example, I will give you a brief example on the weekly time frame. Look at this. Price, we basically talked about bullish divergence before, right? This is your bullish divergence. Price coming down, RSI going to the upper side. Look at this. RSI is going from lower to higher, and the price is coming from higher to lower side. So this is a bullish, actually a bullish divergence. Why a bullish divergence? Because this tells you that price is going to be bullish soon. Same way, on the opposite manner, look at this. What happened over here? Price made highs after highs, right? Price made highs after highs, and RSI made, you have to pick up the exact same spot, and the price basically made, the indicator RSI made lows after lows, right? The price is going like this, indicator is going like this. So this is a bearish divergence that tells you in the coming days the price is going to come down, right? Now move on to next example. The same what we talked about in just few minutes ago. Like, look at this. Price is coming down and indicator says that this is a bullish divergence, right? Price coming down, but RSI is going to upper side like this. So this means this is a bullish divergence, and look at this. And there was a gain of almost like 98%, almost like 100%, 2x, just when your RSI flashed a bullish divergence. So this is how these indicators help you indicate the price movement in the coming days, coming weeks, coming months. Now on to the next thing, chart patterns or the price action. I will make a complete guide on price action. remember this thing. If you guys just completely have a command on price action, you guys do not need to look at any other thing. This is one of the major thing that I will make a complete guide on price action, right? So for now, just ignore this topic. You guys are basically just beginning to start with the trading, so practice on the things I have told you today. Now, next thing is your candlestick patterns. Candlestick patterns usually do not work on lower time frames these days, because the market is very advanced, and if you guys will spend your 80% of time looking at candlestick patterns, believe me, you guys are just wasting your time. Whenever you guys will go ahead and look at the markets in kind of a higher time frame view, you guys will be stuck up. So ignore candlestick patterns. No more candlestick patterns in our trading. Now, the ninth one is Fibonacci retracement. These are basically called as fibs. Here are these fib levels. You guys have to do one thing. Whenever you guys go with the fibs, just let me reset my everything, so you guys, it will be easy for you guys to apply default. Yeah, it will be easy for you guys to set up. So whenever you are trading with the Fibonacci retracement, you guys just have to select this one, fib retracement. These are all tools given without any cost to you with the help of TradingView. Go to fib retracement, mark the bottom, click over here, start it, go back. This is from the bottom to the start of a complete wave, right? Now, what you guys have to do is, I will tell you settings as well. Click over here, go to settings over here, and what I usually do is just remove the background. You guys have to change some numbers as well, but I guess it will be easier for you guys to have the same settings for the first time. Now, part from here to here is just what we have taken out for our next. So we're gonna just remove this one. Don't look at what happened over here, just look at what's happening after that. Remember, these are your great numbers. 0.5 level. 0.5 level is basically an equilibrium level of highs and lows. This is your 1. Oh sorry, this is your 0, this is your 1. So in between there is 0.5, exact middle level. So first of all, after applying this whole fib retracement, I will just after applying this fib retracement, sorry, I just reverted my background. Whenever you guys are applying this fib retracement from bottom to the top, what you guys have to do is have an eye on 0.5 number. This will work for you as a support. You guys remember support? Like I guess that was our third topic for the today's video. So you guys can go back onto the support, resistance, relook what is support. Yeah, so this will work as a support for you. 0.5 level, when the price came to $36,000 over here, this was a clear buy for you. Just buy over here, just buy over 0.5 level and sell at 0.382 level, the next level, right? How much gain we can make through this? 20% gains, even on a very big asset like Bitcoin. So you guys have to focus on some of the numbers I'm telling you guys. 0.5 level, whenever the price comes back, you guys have to buy at 0.5 level and sell at 0.382 levels. That's 20% because it's a higher time frame. Same way. Now this is another big number, 0.618. When the price came back to 0.618, there's an buying opportunity, right? You can buy over here, but the price went back to the downside. For the higher time frame people, what we guys can do is we can just make several entries. Entry number 1 over here, this is basically known as golden level, golden number, golden level, but whatever you guys can say, golden number 0.618. There's a complete series on the Fibonacci as well. I will also share those with you guys later on, but this is known as your golden pocket as well. Like golden pocket basically means a very good entry level. Now for the long term, this is going to be your biggest weapon. 0.786, just remember these numbers. 0.5 mid level from where you can buy and sell immediately over here. This is going to be your investment number, 0.618, and this is going to be your high valuable investment number, like 0.786. Price came over here, just buy over here. I do not care if the price is going towards here. No, just buy over here and sell over here on 0.618. So same way, how much gain we will make? 60% gains. That's more than enough. So this is how you guys have to use this Fibonacci retracement. This is a very small guide on Fib levels. However, I will make some new guides as well, only basis on the single indicators. Now what actually happens over here, you have to sell over here. This will act as a resistance level. This will act as a resistance level when the price is below 0.5, like this. Now this is resistance, 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 and when the price is again going back above over here, now this whole thing is invalidated and you guys will make new BTC Fibonacci levels. So this is how your Fib levels are basically helpful to trade. Now moving on to next, you guys have sentiment analysis. Sentiment analysis basically means this is my Twitter. I'll go on to my home. We look out for some people showing the Bitcoin ideas, like for example, Kingpin Crypto, a very good trader. He is basically saying that Bitcoin is going down, right? One point. Second point, this guy says, another very good trader, Crow. Why I haven't followed him? Crow. He is basically saying that the Bitcoin can do something like this. So you guys have to look at that. Most of the people are saying that the price is soon going to the downside. For example, this guy is I want coin. All of these are my good friends. So like the price is going towards the downside, this guy is saying. So you guys just have to focus on the price movement, where most of the people are saying that the price is going towards the downside or the upper side. For example, Jackass is saying that the OP is going back to the downside. So you guys have to just focus that where the most traders are telling you that the price is going to the downside or to the upper side. So consider sentiment analysis by monitoring social media, news and online forums to gauge the market sentiment and potential market moving news. And I will also say one word at the end, that do opposite of where the most people are going in. Like if all of these are saying that the price is starting to go down, they will be right as per their technical analysis, no doubt, but the market makers will try to trap them and they will try to make some manipulation and move the Bitcoin onto the opposite way, where actually most of the traders are expecting. So this is one of the major things, sentiment analysis. Now you guys have to look for the cryptocurrency specific factors. Be aware of cryptocurrency specific factors that can influence the price movements, such as regulatory developments, technology upgrades and security breaches. Those can basically manipulate your, not manipulate, but can move your Bitcoin price suddenly towards the upper side or to the downside, because all of those news have an impact on DXY, on dollar. All of those news have impacts on dollar. So whenever the dollar will go like this, Bitcoin will go like this, and when dollar will do something like this, the Bitcoin will do something like this. They are basically inversely correlated. So after that, we have to move on to our next point, and I hope I'm basically making this as simple as I can. So the next thing is your crypto exchanges. I guess 12th point, I remember all the points on my fingertips, because every day people come to me and ask me that how to basically start the technical analysis. So I try to make them in the specific brief 20 points. So the 12th one is crypto exchanges. Keep an eye on the exchanges where a cryptocurrency is traded. Prices may vary, like slightly, that can be up and downs between different exchanges. For example, I can't give you an example right now, but I'm just letting you know, guys, that there are two exchanges, right? This is Binance, sorry for double I, and this is your Bybit, and this is your OKX. So I'm just giving you another great opportunity of making money, right? This is your Binance, this is your Bybit, and this is your OKX. Okay, now we're looking at coin. For example, coin is ADA. That's a shit coin. Coin is ADA, and this is trading on Binance at $1. This is trading on Bybit at $1.1, right? And this is trading on OKX at $1. So what you guys can do is simply go to Binance, buy ADA over here, transfer it into the Bybit, like send from Binance to Bybit, and sell at $1.1 with 10% profits. Then move your profits back into Binance, buy it again, send it again. Do it several times until you are happy, or until when the price is actually same at both exchanges. Same thing if you don't use Binance, you can open up OKX, buy at $1, send to Bybit, sell at $1.1, move your funds back, buy more, send again. So this is basically known as arbitrage opportunity. Arbitrage basically means buying lower at one side, selling higher on the opposite side. So this is a very helpful, extremely helpful for the new traders to look for the arbitrage opportunities to basically make your investment more than you have. And it's very simple. You can just go on to just write Binance over here, and you can open up the Binance exchange over here, write Bybit over here, and you guys will be opening the Bybit exchange, right? OKX. Several exchanges are already here. You guys have just write on the Chrome or any other tab and just open the website whenever you want, like this. Binance, they just saying me to log in, Bybit, OKX. So this is how you guys can easily trade anything with just help of some extremely low level kind of hard work. So the next thing is the market liquidity. Be cautious of cryptocurrencies with low liquidity, as they can be more kind of susceptible to price manipulation. The reason is that whenever you guys actually all of you will be new traders who are just watching this video from start till now, just go on to coinmarketcap.com. Yeah, go to coinmarketcap.com, look at top 100, just give me 1 minute. Yeah, these are your top 100 market cap coins. Let's start from here and end up over here. Now you guys just have to trade in the top 100 coins, right? Don't trade anything outside these top 100 coins for at least like 1, 2 or 3 months. Then you guys will be able to know what is crypto liquidity. Liquidity is basically an amount. For example, if you are buying Bitcoin for $10,000, Bitcoin will not pump. It will stay at $26,098, right? If you're buying in huge amounts, still Bitcoin will not pump very fastly. Like look at this, in the past 24 hours there's just a movement of 0.10% to the upper side. So you guys just need to understand that you guys are just putting $100 in a coin, and that coin will not pump immediately. So that's why you guys have to trade in the first top 100 coins for almost like 1, 2 or 3 months to just know about the liquidity. Then risk management is our 15th and very important message for the new traders, especially, that you guys have to look at risk management every single time you are trading. For example, a guy started trading over here. A guy started trading over here. there are two guys. For example, Jack. I'm just going into the brief explanation, but even those briefs are so detailed. And the second one is line, right? Now Jack started trading over here with investment of $100, and line started over here with investment of $150. The win rate of Jack was 40%. 40% win rate, like he wins 4 trades out of 10, and this guy was having the win rate of 50%. Now this guy have more capital, have more win rate, but at the end over here, this guy is having $120 and this guy is having $200. How is this possible? Yeah, this is just possible because of risk management. For example, Jack is throwing $10 in one trade. For example, this is a trade setup of Jack, and this is a trade setup of Jack. Like he is buying over here and he will sell the Bitcoin if the price goes to $3,662, and he will take profit if the price goes to 18,000. So this is a 5 risk to reward ratio. Like if he is trading this setup with $10, he will lose the $10 at $3,662, but he will make $50 extra. Like the risk reward is 5%. Like the risk is $10, the profit is $50, and his win rate is 40%. He will still make a lot of money. Same way, if the lane is basically buying over here, his target is over here and his stops are over here, yeah, he will make money, but having win rate of 50%, he will definitely be screwed up in the end because his risk reward is 0.9%. Like he is throwing $10 in one trade. If he will win, what he will get? He will get he will get $9 if he will win the trade, and he will lose $11 if he will lose the trade. So this is what risk management teaches you. Also for the risk management, I will advise you guys to have a look on my Discord channel. There's a complete description of risk management and how to manage all those risks. Now, adaptability is our 16th point. Adaptability basically means that I will request you guys to have a copy or notes or something like that with you and write each and every point on a notebook. That will definitely help you in your coming weeks, coming days of trading. So adaptability is basically means that you have to be prepared to adapt your trading strategy as market condition changes. Cryptocurrencies, definitely these markets are highly volatile, subject to sudden shifts. For example LPT. This is just a coin. I'm just sharing you guys just for the learning. Look at this. If this coin is giving you a difference of 18% in almost like in, yeah, we can count the candles by the way. 1 hour, 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20, something like this. Coin is giving you 18% gains in 24 hours, 19% gains in 24 hours. This can also take out your 19% gains in less than 24 hours. Like this is 12% downside in like 12 hours. So these are highly volatile markets. Yeah, these give you extreme perfect opportunities for making money, but these also take you money in seconds, in minutes. So you guys have to be very careful. Now the next thing is backtesting. All of these technical analysis things I have already shared with you guys. Only one thing is pending, and that is price action. I will make a complete guide on price action because that is a detailed session. That is a kind of detailed lecture on that one as well. So the price action is something like that can gives you a complete edge of trading. Like you do not need to look at RSI, any other indicator, any support, resistance, any volume. You just have to look at one price action and take the trade. All of others are just for the kind of confluences, like your helpful matters that can basically help you trade later on. So backtesting is very important. Backtesting basically means you took a long position over here that the price is going to the upper side, and that is stopped out over here. Like you took this trade that went down, you had a loss. Now what does this mean? That you will just ignore this shit and will move on? No, go back, look at what was the reason the price again came down. Note that on your notebook or on wherever you guys are making notes or wherever you guys are just journalizing your trades. Keep this in mind, what actually happened over here, and this will be the perfect level, the perfect teaching that either you will win, either you will learn. So these learnings will give you extreme edge, and next time you will just ape in exactly at the bottom. So learning is always important, and try to learn from your losing trades, and always backtest your strategies. Like if you took a trade over here, now you have already won the trade, but this does not mean that you guys have to just move on to the next one. No, look at all the factors why price went up here. What was another factor? Like there was a liquidity above these lines, so price went and took that. So look at each and every single aspect to have a complete backtesting strategy, and that will help you in your coming analysis of the coming trades. Now 18th one is your diversification. I have missed two of the points in between, but all of those points will be shared completely in the next learning session videos. So the next one is your diversification. Diversification basically means that if you have $1,000, are you going to put all of $1,000 in one trade? Like this is your trade, you have just longed over here, stops here. Will you put all your $1,000 in this one? Never. This will just completely bankrupt you if the price will go down. And even if you put $1,000 in one trade, when the trade will be slightly positive, you will say, oh my goodness, everything is invested in this, so I should come out. One day that same thing will make you lose every single penny you have. So always diversify your investment into several trades, make a good risk to reward ratio. Also, one more thing about diversification is that you have $1,000. So will you keep everything at Binance? I don't think so. It's a wise thing. FTX is an exchange that has already been bankrupted, so I'm just giving for the example. So what you guys have to do is, you have $1,000, make account on Binance, keep $200, sorry, people will say that you are just giving them extra edge. OKX, or $400. Now these are your basically diversifications that you are keeping $200 in Binance. Now for example, you have something like this, right? Now if Binance runs, if they become bankrupt, so you will just lose $200. So rest 3 are already at your back end. For example, FTX just ran few months ago, I guess previous year. So FTX went out, like they ran with the people money, so you just lost $200. You still have $800 for the trading. So this is diversification. Always use this diversification in your trading. Always split your eggs. Don't put all your eggs in the same bucket. So this is how you guys have to actually start with the trading, and these were your complete guides of technical analysis. All these points are basically included in technical analysis. So I hope so this video will be basically giving you an edge to move on into the further learning sessions, and I will also make a complete guide on fundamental analysis, and the next guide will be definitely on price action. So thank you everyone for watching. Please like, share, subscribe videos to also share this video to the people who are actually new to trading, who want to learn trading. This will give them a great edge. Thank you everyone.